Good day. Ira Epstein with your agriculture wrap-up, and this is for Tuesday. And we are now at the 3rd of March, 2020, about 4:15 in the afternoon. You know, it's funny to talk about grains because it's not where the action is right now. It's all in the financials. As you can see, sort of a mixed day in the grain market. We had today the Fed cut what I'm going to call a preventive move. Came out of left field, actually, in one way. If Sunday night the Fed Watch page on the Merc was predicting 100% they were going to cut rates, but after the G7 and nothing was said, then they came out about 2 hours later this morning, cut the rates, and it created chaos in the stock market. But it's really not impacting the grains. Grain market at some point's got to start wondering when things in China start picking up to the point where an export flow can begin again, where things start getting back to normal. We're not there, don't get me wrong. They got to start thinking about it. On the energy markets today, we've got a net draw on the API numbers. Nothing super large, but it's there. That's a good sign. But the market's not looking at that. It's looking at what OPEC's doing right now and trying to get a handle. Is it going to be a cut of 600,000 barrels up to 1 million barrels? Who takes the brunt of it? Does Russia join in? There's still many questions. We'll find out each day more and more about that. But let's go back to the grain market. In the grain market, the bias in soybeans is still down. And I say that because when the market's under the 18-week moving average of closes, which it is, I say the bias is down. When it's over it, the bias is up. It's a filter that I use. So bias down. Now let's go to daily charts. On the daily charts, we are caught, as I pointed out, between this 910 to just under the 880 level. We're whipping back and forth. We had this monstrous break, had a bounce, came up, found its footing just under the 880 level, and now the question is, can it get over 910? In terms of a trend, there isn't one. If you believe that an uptrend is made of higher highs, higher lows, and a downtrend, lower highs, lower lows. Well, what you have right now is a lower low and a higher high. So they're not in conjunction with each other, and they're not setting up to set up a trend at this moment either. When we look at where the market battle is, if I cover all this behind you, look at the red line, that 18-day average of closes. I call that the line in the sand. And the reason is so often when a market starts hitting it either way, you get false moves and the market's winding up. You often see that winding up not with the moving averages, but with Bollinger Bands. And do you see how they've narrowed in? They're no longer these big bands that were dropping down because they were chasing, if you will, price action. Now as this price action's gone sideways, what it's doing is it's winding itself up for whatever the next move is. That's something you watch, you put it on your radar scope. From here, events happen. Now, typically, the first time you hit the band on the downside or the upside, you get a failure in the market. Why? Because the pros that have been going with the winding up want to take money off if they're long. And why do I think they're long? Well, the bias is up, so you think that. That's where the resistance. In order to get to the lower band, you have to be with the bias down. You'd be under there. So I think the pros would take it off there, the first challenge of it. Next, I look to see is momentum telling me a story, because often momentum leads price. Well, in this case, momentum is still pointing up. Any reading over 70 would be what I call overbought. We're not there. Neither of those numbers are. They could be tomorrow. So if they could be, what would it take? Probably a slightly higher market. So I'm going to stick with what I believe. If you get over 910 and a half, 910, right in that zone, be careful. The pros might take some money off the table. If we take a look at right here, this was that sideways action. Momentum up. The market was right through here at 298.30. The settlement was right there. I don't want to lead you to the wrong direction. Right there. So you had a higher high, lower low. Notice what you had done with the Bollinger Bands. First challenge. I think you'd agree with me. Now the question is, does it break out of sideways action or just keep flip-flopping back and forth? You had one close over it. I'd like to get two in a row to know it's going to stay good. Okay. It's also now up at the 100-day average. That's a major resistance often in these markets. This was February 28th, by the way. The market started stalling out, and look for this market to have trouble in these two numbers. It's now overbought. It's broken out to the upside. It hasn't had a chance to get a correction to make a pattern from here of another break low that is higher than this one and then resume trying the uptrend. Doesn't have to, but that's what I'm assuming it wants to do. In the soy oil market, be careful tonight. Momentum is starting to turn, and while both numbers are what we call embedded, they've been going sideways under 20 for several days or more, and you see that. You're now knocking on the door of losing that. When that occurs, it's a sign that the market is ready for price and the 18-day average to attempt to run at each other. Does it always work? I don't know anything that always works, but it's a high percentage that it works. Go back and look at it yourself, what happened in past conditions. You often see that run. Nothing works all the time, but if you look here, when you lost the embedded reading, you went back to the 18-day average afterwards. So I'm looking for that. This is the weak link of the market right now. Meal's in more demand than the oil at this time, but they'll shift. It's called a crush spread. They'll shift back and forth with each other. In the corn market, you ended the downtrend today. Now, when I say ended a downtrend, you've been coming from basically that high all the way down here, and in the process, you've been able to keep lower highs, lower lows, running to new lows. Do you see what happened right here? You got your embedded reading. Yesterday you lost it, so think of soybean oil. You haven't lost it yet, but when that occurs, I'm looking for price in the 18-day average to make a run at each other. If this market gets over 378 3/4, you break the pattern of lower highs, lower lows. You've already lost the embedded reading. The only time you can get it back is the exact next day very quickly, otherwise it doesn't happen. And if you run up, I'm going to look for the resistance back at the 18-day average of closes. So I'm out of the downtrend. It's accomplished what I wanted. Now I need a pattern to develop. Don't have it. So what I've got is the Bollinger Bands have widened out, really wide, and now the market needs to spend, I think, some time figuring out what next. In the wheat market, this is an oversold condition, not both numbers going sideways under 20. You've been in a downtrend. You've been running the lower Bollinger Band. If the market rallies from here, two resistance points, the 100-day and the 18. The dilemma for you is if the market's going to make a run there, it's going to break the downtrend. Being an oversold market, I don't see the pros being aggressive on the short side to stop that if it occurs. Again, could be a market that wants to get out of the downtrend, but maybe not ready to go anywhere. In the sugar market, I was looking, as you know, at the end of February, I kept saying I'm looking for the seasonals to turn down, and they did. Now you're getting to the point of a key support area between the lower Bollinger Band, the 100-day average in an oversold condition. I think the pros are going to take some money off the table right now in this market. It needs to either embed or get a correction before I think they'll step in. In the coffee, my canary, I've been saying that to you for a while now. I come up with these crazy ideas, but logic often, for me, is what I count on. And what I kept saying is Starbucks had closed near 2,300 stores in Beijing and other parts, big cities in China. And I'm going, gee, now if 70% of the people, according to the Chinese press, are back in their offices or going back to work in some manner, well, as they're walking down the streets, as they're riding their bikes, coffee's a popular drink there. So how many of them are buying drinks? Wouldn't that make a bottom here? And sure enough, that's what I think. It's Ira's coffee theory. Probably totally wrong, but it's my own theory. Is the market ahead of itself yet now? Maybe. If we step back here, first day over the upper Bollinger Band. That's normally where the pros take money off the table, but you got a second to it. That tells me that this sideways action is enough to call it a breakout. That doesn't mean it's going to stay over the Bollinger Band over and over. It only stays over it 5% of the time, so I give a 3% chance of staying over it tomorrow. But I'm bullish because I've got the higher lows, higher highs. Keeping me away from telling a client to buy it is that it's overbought. So I wouldn't be surprised we get pullbacks and the market challenges that 100-day average again, but I don't see anything bearish here other than being overbought. In the cattle market, well, I'm watching cattle with an embedded reading. Until this is lost, I think on these rallies, the pros are going to sell the market short. I realize that we've had a vertical price drop in this market. It also means we're not moving supply of animals. So you've got to keep the two together, and it's not as though China's going to call up tomorrow, hey, Uncle Sam, send me a bunch of beef. First of all, you got to be able to get the ports running, everything going the way that you want there. And I'm not saying they're not taking some stock in, but this market's not saying that we have export demand. In the hog market, each challenge of the Bollinger Band, a broken record. That's where I think pros take money off the table. This is the neutral number, the 18-day average. And no, you're oversold. I don't think the pros are going to sell into this market again. What other pattern do you see? Come on. You see the sideways action pattern. Very, very important to the market. So I put all that together, try to come up with ideas, and what I do in my research, and I do put out twice daily written commentaries, at least one day an oral commentary once a day. Used to do twice a day, but I do so many videos for you now that I'm getting away from that more and more. And the reason is my research, my full research package includes my morning subscriber video. Now this morning I'm up bright and early. I'm normally recording 5:30, 5:45 a.m. Central Time. I decided today to hold back. Why? Come on, what went on this morning? G7 meeting. I wanted to see what they came up with. As soon as I saw the boring announcement that came out of them, I went and did the recording, and it was out, and I was back in the office very early. I don't live far from the Board of Trade. But to make a long story short, this is where I start you off. And in that, I'm telling you, buy here, sell there, do this, do that. I back it up with a written update that comes out at approximately 11:30 a.m. and just before 8 p.m. Central Time. It'll look just like that. It's got buy and sell recommendations. Some people don't want the buy and sell. They purely want my commentary. We strip that out and sell that if they want it. Some of the numbers, if you're a window envelope fiend like I am, I like them because there are other resistance and support zones. I publish them for you in the full research. How do you get a trial to it? It's simple. Go to our website under free trial, sign up for it. If you've had one before, we have records. Buy it. Come on, how hard is that? If you're interested, you can also call my staff. They'll get you signed up in 2 seconds. Or you can go up here. If you click this icon on in the YouTube, it's going to take you right to the free offer page. I'm Ira. You have a great day. I'll see you all tomorrow.